I got you on the 4 hour chart, and as y'all can see, we never broke out past the 22,000 mark really. And I can tell y'all that in my previous videos, y'all can see I'm pointing this up right here. This is a gap, and we never broke through it. Obviously, as y'all can see, that's how I know it's gonna stay below and won't go any higher yet. And also, y'all can see we came up tapped this 50 EMA one time right here. This will be the second time, and this will be the third time right here. So we have two options, right? It's either we come back up, tap this 20 EMA, which isn't too far from where it's at right now, and then go just continue on down, basically a reversal to the downside. And if we wasn't getting any upside, we may come halfway up here to the 50 EMA. And I'll probably say just around 20,000, 20,500. Not above that though. Basically not above this range right here. And this is at 20,000, like 875 at the top of this spike. So it's not going past that for a fact. We'll come up close to it and we'll get a reversal and we're going to stay down. Y'all see it's Friday, the weekend. So y'all know it's definitely going to drop soon, especially on a Monday. It's going to drop. But for a heads up, anytime it gets below this candlestick, which is 18,000, it is going to the next zone with no doubt about it. So overall, on the 4 hour chart, we really don't see too much of a move up at all. So basically, I'm saying, don't even mess with it, man. It's all up to y'all, though. Depending on kind of trader y'all is. So on the daily, as y'all can see on the daily chart, we came and hit this 20 EMA one time, two times. So it's possible we can consolidate this general range and hit it one more time at any day and reverse and go down to the next level. But like I told y'all before, this 18,000 is a caution level base. That's why I got it yellow. Because once it drop below there, we're going to get a nasty candlestick, something similar to this, because they're going to have to push down with some force. So yeah, on a daily, I don't expect this thing to get above this 20 EMA at all. And y'all see we just staying below it, spiking up and spiking back down. Now get on the weekly chart, you see our next levels right here. Our next level I'm looking at is 14,000. Slide over so y'all can see this. 14,000, y'all can see it spiked up right here and boom, stop at 14,000. A little further out, y'all can see the top of these candlesticks. Doji, all that right there on 14,000. That's why it's my next support level I have charted. Then afterwards, we looking at 10,000. And y'all can see it right here. It's basically leveled off. Y'all see resistance, 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 resistance all throughout the whole chart right there around 10,000. And also, like I mentioned before, this large head and shoulders, it started off right here at 10,000. So that's just looking at the market alone, it's following what the market's supposed to do with the head and shoulders. Because every time there's a head and shoulders, it always come back down to where it started. This is how I know it was going down 10,000 way in the beginning. Because that's what the market shows, going out 10,000. But the tricky part is, like, whenever we do make this descent down close to 10,000, it could be 14,000. But basically, like I showed y'all, we got like 2 more weeks left before we all the way down here below 10,000. Because we have to come all the way down here. The exact number, I'm just say $5,400 is the exact low. Not the exact low, but it should be the exact close of the low of Bitcoin. Because it'll be a complete recovery of all of their money they gave to everybody. So it has to come down here on the weekly. So there will be 1 week, we'll see a nasty candlestick just like this. I keep showing y'all. It's going to be like this. This is going to be the last drop. It's going to be just like that. Because that's exactly what it did before. The exact same thing. Y'all see it's a head and shoulders. Boom, drop down. Look to the side. It recovered everything right here. And y'all can see these smaller candlesticks, whatnot, with the spikes. That means they recovered everything. As they was going up, they was recovering back down at the same time. So that's how you know it's closed out there, and they only had to recover that. Just like they had to recover this in the same fashion. But it's going to be a spike. Like the spike is going to be, see this, the spike, what I mean right here, the wick. This hole between this red and this blue will be a wick by itself. Now let me go a little further out so I can explain this to y'all. See, on the monthly chart, right, there is a pattern. Let me go ahead and chart it out for y'all real fast so y'all can see the pattern. Like I always show y'all, look at my older content. It's a pattern that performs everywhere, and it's so predictable. Y'all come up here, this is the retracement, and boom. See, the thing is, it has to close above $10,000 to keep this pattern valid. Then afterwards, we'll go up to our three level rise, basically. So like I say, it has to close above 10,000 in order to validate this pattern, and I don't see why I wouldn't validate. I mean, even started off with a good pattern. Pattern down here, one level rise, 2 level rise, 3 level rise, boom, then we out of here. So I'm expecting the same thing. I mean, it's all textbook. I mean, if you just look at all the time frames, it's textbook all day long. But this is why it has to close above 10,000 because of that. But we will get a spike down, like I say, to around 5,400. Otherwise, we good. Anyways, anything I just said is not financial advice at all. Y'all grown. Y'all make your own decisions, but like, comment, and subscribe. Peace.